Yo, welcome back, guys. It's been 2 days, but not that much has happened. We put out a solid video. I've been doing a lot of crap, short content for the algo, but I put out what I thought was a pretty solid video, 2 days ago or a day ago for you guys, just to update you. Today is Tuesday. We're going to take a look at what we discussed in that video. We got Luna pulled up behind us. We're just going to do a brief update on Luna and UST. Then we're going to get into the trading. So thanks for being here. Great to have you back. Let me ping everyone really quick. I like to start them, then ping them. It's a good way to do it. It's the right way. There we go. Pings are out. Pings are deployed. Smash that like button, guys. Let's get to 420 likes today. I think we can do it. If we get to 420 likes, maybe we'll have something a little special. Something a little special lined up. Maybe not. We'll see if you got it in you. So let's take a look at Luna. Everyone's favorite story this week, or probably this month, because it's the only interesting thing, I would say. I mean, Bitcoin going down is interesting, but nothing is as interesting as a coin trading at 120, now trading at thousandths of a penny. Honestly, this is such a dumb play. A lot of people had the same idea that I did, and don't recommend it. Don't recommend my ideas. I took a little buy on Luna, as I said during the last live stream. It was down here. I have it marked. No, this isn't support or anything, though it seems to be maybe acting as support here. Whoa. Mr. Casper himself. Celebrity sighting. You got a celebrity sighting within a minute of the stream. Good to have you, brother. Good to have you. I don't know. I see the super chat. I don't see you in chat. I want to make sure you have a wrench so people know you're real. My buy turning out looks like kind of like support-ish, but this is so stupid. Don't do this. Like, I bought 0.0014. I did not even put in $100, guys. I put in like 20 bucks. I got like 100 something thousand. I don't know. This is so dumb. Here's what's going to happen. Luna is going to keep trying to rebalance with UST unless they completely just ditch the project, fork it, move on to something else, which is like the reality of it. The bajillion tokens we have aren't going to equal bajillion tokens in the fork. They're going to do something else. This is super degen. I just thought it would be funny, and I've heard so many people do it since that, like, now I want to start warning people. Please don't. Don't be like me. Be smarter than me. Do better. Do better than me. Oh, you got a wrench. There he is. What's up, Jake Casper? We got to get a collab going. What's going to happen? They're just going to keep minting Luna. That's the thing. This is the issue. Is they're just going to keep minting Luna in an attempt to rebalance. The supply is infinite. And these are just going to, I don't know, go to zero maybe. Honestly, they won't even go to zero. Exchanges are just going to stop trading them. That's really what's going to happen, in my opinion. So I'm fully ready to lose that little amount of money I put in there. If you put in more than you're comfortable with and you're in profit, highly recommend get your principal out. The odds of Luna trading back to even $1, more or less $120, is very low. Very low. Imagine how many people bought like 4 million of these for like $100. If it goes to $1, there's not going to be liquidity for someone to pull $4 million out. This is a degen play. Take profits if you're in it. If you're not, I hope you put in what you're expecting to lose, not even willing to lose. Talking about Luna and UST. UST now trading down to 14 cents. I think it traded, well, maybe not on this spot pair, whatever exchange we're on, but it did trade down to, I believe, 4 cents, a 96% decline on a stable coin. Maybe we should add that to the title of today. Unstable coins. Something along those lines. The unstable coins. That'd be funny. My sense of humor, though, is not preferred. Really don't recommend. I don't think UST is going to get its peg back. If it does, it may take a very, very long time. Not financial advice. Nothing in this channel is financial advice. In my opinion, this is a knife that is not worth catching. Not worth catching this knife. Stay away, in my opinion. We got to do it. Smash the likes and subscribes, guys. Every time you like during the live stream, it brings new viewers. YouTube says, hey, this is a good stream. People are engaging with it. I'll send more people there. So that's really the only way, not the only way, but that's how our channel grows. That's how these streams get more popping with more fam. I appreciate you guys. It takes a second of your time and it makes a difference. It really does get the stream out there to the masses. And I think people need our content lately. I think they need it. Quick Shout out to our sponsors, Femex and Market Cipher, two of the top in the industry, leading brands. Femex, an amazing exchange. We're going to check in on our trade here in just a minute on Femex. And Market Cipher, you see me using it on every chart. If you're a serious trader, definitely look into Market Cipher. If you do decide to pull the trigger and join the Market Cipher fam, use promo code CROWN for 15% off. That's right. That's right, baby. All right, we're done with those. Let's get into some real stuff. So in the video, check it out. It is pinned to the top of the chat after the live stream. We talked about two factors into Monday. I'm going to say this. We are seeing these factors play out, but we're not seeing what I was hoping for at the moment, clearly. Bitcoin's pretty stable, it seems, at about 30K today. And the two factors we discussed were the dollar, which for some reason pulled up on a different tab, even though it was in this tab. Let's take a peek. This is really what we were hoping for. The dollar has been on a complete ripper. This has been putting sell pressure just across the board. Across the board sell pressure. On every equity asset, especially risk. And what we were looking for into this weekly open was for the dollar to show some weakness. It really hasn't shown weakness all of April, all of May. Now we're seeing potentially the third red candle on the daily. That may be. That's right. That may be the signs of weakness we're looking for. Unfortunately, I was looking more for a relationship of Bitcoin going green while this happened. It doesn't seem to be happening yet. I think by the weekly close, this is going to be a good signal. If we go on to the week here, we can see the dollar currently trading in a bearish engulf. Haha, feels great to see something else have a red weekly. I'm sick of red weeklies on Bitcoin. But if we can see the dollar close down here or even lower, we may see a return to that 100 point. We can see that was resistance. It may come back, tested as support, and then the dollar may go higher. I don't know. I can't accept personally that we're going to see a fiat currency go parabolic. It just doesn't make sense. There's no reason for it. And in fact, it's not even a good thing to let the dollar get too strong, even for the US, as exports, services become too expensive for other countries to afford, as they have to pay in the conversion. Anyway, moving on. Not quite getting that reaction yet. If we look over onto BTC USD, that's previous. That was May 14th's trading. I need like a clean chart. Someone Gina, give me a clean chart. Today's like May 17th, maybe? Or is it the 18th? I do not know. One of the above. One of the above. Let's get rid of all this gibberties. We do want to keep our 2021 open. This is going to be the like retainer. We're going to have this on every chart going forward until we either break to a new all-time high or fall down and break 25K. Even then, we're probably going to keep this on our chart. Yesterday's close was bearish engulfed on the daily. Not a bullish sign today. We don't see a lot of buyers, and that's actually backed. That's actually backed up. Let's pull this up too. I put out a little short about this earlier, but I wouldn't blame you if you didn't watch them because they are all crap. Actually, occasionally I'll put in some effort, but they're really just for the algo. Pulling up the crypto fear and greed meter, which is always really difficult to look at live because of the way it is set out, the CSS on the page. We're now at an 8. There's an important factor here that everyone, all of you, should be thinking about. We have seen an 8. I believe it was 2 days ago because, yesterday was a 14. We saw 9, then we saw 14, now we're at 8. So think in your brain, chart out these numbers. We can look at the actual chart here. Here it is. Look at the actual chart, it'll show us we're at an 8. That is lower than May 14th and weirdly lower than May 12th. So right now, at yesterday's close, is the highest fear. Highest fear. Let's see. I think in a very long time. Probably March 2020. We have to go farther back. So in an entire year, we haven't seen these values. And I want to say March 2020. Ooh. March 14th, 2020, we saw an 8. So according to volatility, according to price movement, according to social media sentiment analysis, or what all... You can look at the factors involved in the Fear and Greed Index. It is certainly not a scientific thing, but it's worth looking at. It is suggesting that today is as scary as March 20th, or March 14th, 2020. That's pretty hard to believe, isn't it? I believe there was only one lower rating ever. And yes, that was August. No, there was one in February of 2018. August 2019, when we saw a Fear and Greed meter of 5 in Extreme Fear. That is the only lower rating, I believe. Yes. So we are at. I was incorrect. I thought 6 was the previous lowest. I was wrong. The lowest reading was in August 2019. That was a 5, and that's it. 8 is the floor outside of that one-off day. This is an interesting thing to consider when we look at the chart. So let's use our logical caps here. Let's use our logic caps. Put them on. Right here, in my opinion, this is the scariest day. WTF, right? Right here. I think everyone can agree. That was the scariest day. Bitcoin broke the 2020 low. It went down to 25K in a snap and came back up. Yet this was like a 14 or something on the Fear and Greed. On the 12th, let's double check our data here. I don't want to get this wrong. 14th was a 9. So 14th was a 9. Oop. Maybe I'm getting this wrong. This was the scariest day. This was the lowest Fear and Greed on the 14th, previous until today. 9 Fear and Greed. And then today, 8 Fear and Greed. This was the scariest day with WTF 14 Fear and Greed, right? 14. It's close enough for the point we're about to make here. This was the scariest day. Logically, on this close, we should have seen the lowest Fear and Greed score. Period. Doesn't make sense. Doesn't add up. Doesn't make sense. On the 14th, right here, after a green candle that was not very nice, but we had this, I don't know, this isn't super great, but now we got a 9. Today, right here, we have an 8 being the lowest Fear and Greed score ever outside of one day in in August of 2019. So what is this saying to us? This is saying this is less scary. This is more scary. We've made up this term. We like to make up terms and analysis here on this channel because how else are we going to figure out new stuff? We've dubbed this sentiment divergence. And this is price and sentiment diverging. Similarly to how RSI, MACD, Market Cipher, how our indicators can diverge from price and suggest something, so too am I proposing that sentiment is doing so. I said this, you know what, that was on the We Are CC podcast. If you guys want to check them out, I'll put the link in the chat. I said this yesterday on the podcast. My 66-year-old mother, when I saw her 2 days ago now, let me see, that was down here. When I saw her on one of these days, she brought up Bitcoin to me. She said, well, Bitcoin's been in the news a lot, huh? And I was like, what, really? Because I assumed no one was paying attention. I was like, what do you mean? She's like, oh, they said it went down a bunch. It went down half and I don't know, something she said. And to me, that was just eye-catching. Because at the top, you'll hear, those relatives, those family members who aren't involved come to you and say, oh my God, I heard Bitcoin's up. And that's usually the top. And now I'm hearing it from my boomer. I love her. She's a saint. Don't you dare ever say anything disrespectful about my mother. She's a saint. But my boomer mother bringing it up at, down at 25-ish, 26K, maybe 28. That is something. That is something. There's some sentiment divergence. There's some sentiment shenanigans going on. I'm not going to say that means the bottom's in, but that's good. That's good. She wasn't talking about it back here at 30s. Now she's talking about it here, and she's talking about it with fear. She's obviously not afraid, but like with fear, that is the concept or the core element of what she brought up. Interesting things to digest. So there was one more aspect we looked at in that video, and this one not playing out as well. The Dixie is down. In fact, it has been red. This is the third day going. So the dollar is following what we were looking for on Monday's open. Bitfinex longs still not chilling. I will say it does seem their growth has slowed down. We had a single red day here on the 15th. So for a single day, I don't know, not even 0.1% decline in longs, back up. So these are still pushing up, and these are still suggesting that maybe the bottom is not in. As we did see in the previous, in last year, July, we did see Bitfinex longs reach to highs and then start closing when the bottom was in. So little conflicting signals here. The dollar not giving us what we wanted, apparently, and Bitfinex longs not giving us what we're wanting either. So that's 2 thumbs down. So I still think it was a good video. I still think it had solid value, but we're not quite getting what we wanted yet. That's the way it goes. Let's see. We got 500 watching. We've been having great numbers. The fear brings all the boys to the yard. We have also had a lot of bots lately, and we've been doing a little bot check, and I just think it's fun to do. If you're not a bot, show us. Put something in the chat. Just type in some random gibberty-gook. It doesn't matter. You can put your favorite coin. You can just put random letters. Let's just get the let's get that chat rate per minute up. There we go, Yanni boy with a 1. Shalom says there's no real fear yet. I will disagree with Shalom there. Shalom and I have had many a conversation. He is a very valued member, OG of this community, been in Bitcoin longer than I. But we do disagree at times. I'll disagree. I think I know where you're coming from, as I want to say the fear it's not as palpable. There we go. Thank you for spamming, boys. Get those spams up. You guys are the best. Prod19 says you're a bot. Well, if you're a bot and you'll admit it, you're allowed to be here. I'm a Moonboy, says JR. JR, I don't know. Moonboy, I mean, Permabull, yes. Moonboy, maybe also yes. I don't know. I love my Bitcoin. The reason I want to say it's not as palpable is simply because typically, let's say back at March 2020, it feels like the people who would be scared right now are already gone. That's why I think the fear maybe doesn't feel as palpable or feel as real. Thank you for the spams. Plot twist, I'm a bot. True that. Where's your vape? I always have it with me, man. Your fleshling. We have a lot. I like the representation. Insert human response. Thank you. Thank you, fellow human. Thank you, guys. Thank you. That was a nice little bot check. We got 500 watching, 167 likes. Let's get to 420. Let's get our 420 license. So we can spend the rest of the day in harmony blazing it. I don't know if Shalom responded because so many people replied there. What did he say? Spam it up. Yo, what's up, Jeremy Ragsdale, my man? You guys check out Jeremy Ragsdale and Jason Casper. Actually, both high class channels. What's up, Mr. Poppy? I only vape on red days. Not true. There we go. Yeah, retail. Daniel says retail fear already sold. It's weird. It's strange. We talked about this yesterday on the podcast too about capitulation. Was 25K capitulation? I am not and haven't been a huge proponent of capitulation. I've never really seen it happen in Bitcoin. 2017, end of 2017, early 2018. I don't remember the dates anymore. When we saw Bitcoin plunge from like 20 to 10 really quickly, that was a textbook capitulation. We had extremely high volume. We had extremely high volatility. There was all kinds of panic in the market. We saw it hit a low, large deep retracement, and then a very strong bounce. That is by all means capitulation. What happened next? Bitcoin spent the next year, 2 years, making lower highs, trading at like a 6K support that broke and went down to 3K. So capitulation for me is like a weird topic. I've never seen it really happen in Bitcoin. So I don't look for it often, but there certainly, with no doubt, there was Luna Guard Fund, whatever, the Luna UST Doquan, like the reserves they had to keep their coin pegged, which didn't work, but they capitulated. They had a large holding of Bitcoin. I believe they sold over $1 billion worth. So we can say they capitulated. Did the whole market capitulate? I don't know. I don't know if volumes were high enough. I think on Coinbase, the volumes really were not that big. Let's pull it up. If I can ever find a chart. Let's just use this one. Let's take a peek. This is the chart I used to make that video. Let's see. I don't think the volumes were really that impressive. That looks nice. It certainly was the highest volume of this year. I especially like the average volume coming up down here. That's important. Average volume more important than any given daily single candle of volume. But when we zoom out, is it that much? You know, back here in May, we had higher volume. And even in January, we had higher volume back here. So these could arguably be stronger capitulation events. This did go lower. I think the wicks are pretty similar. I don't know. I think maybe sentiment might be the topic of the day, right? Sentiment might be the topic of the day. We might not have a price capitulation, but I think as soon as this low broke, as soon as we saw last year's low break, I think we had a sentiment capitulation. I know I was one who was saying, guys, as long as 29K, as long as last year's low holds and we don't break it, I don't really see the point of being bearish. It broke, so even I have to walk that back now and say, we did break the low of last year. We did set a higher high and a lower low, so now this chart is not as clear cut. It's not as simple or black and white as it was. I've been holding out. I didn't think it was going to happen, and it did. So even myself, there's a little sentiment capitulation there. This was like the last line, and people probably were holding on to it as long as that low's in, we're good. Well, we broke the low. It doesn't seem like candles are super interested in closing below that low, but that isn't super relevant. I think what might be important here is maybe spot volumes weren't huge, but there are volumes we can't see, such as OTC volumes, and that's obviously how Luna Guard Foundation would have sold $1 billion worth of Bitcoin. I highly doubt that they sold it on Coinbase at market. That would just be stupid. That'd just be dumb. They would end up getting crazy slippage. Maybe they did do it across exchanges with the exchange's help. I don't know. But there is volume that we can't see. And if that $1 billion is part of it, that represents some we can't see. And as well, derivative volumes, I know, were very high. Very high. Let's, I want to see something actually super quick. Let's just a bunch of gibberish. I don't care what it's called. I want to see Bybit. I want to see Binance and Bybit perpetual contracts. I want to see how much volume they had. Really quick here. Let's see. Perpetual volume. Bybit. Wow, that's actually pretty miserable. Not very high. Maybe I got the wrong one. BTC USD, BTC UST. Here we go. Okay, so this actually, I should have made a video about this. This is alpha. Here's your value for this entire stream if you're here. Here you go. Spot volumes were not huge. Last year we saw 2 events with higher spot volumes than our sell off to 25K. However, looking at this is Bybit's perpetual USDT contract. Look at this volume. It's not just the single high candle volume. Look at the average volumes coming up. It has eclipsed anything it's seen. We could definitely attribute this to Bybit. Maybe now has more users than it did back then, etc. But what we want to look for is perpetual contracts just across all exchanges. And if they have similar record-setting volumes, then maybe we've seen a capitulation not in spot, but in derivative. We'll see how that plays out. That's actually pretty interesting. Let's look really quick at Binance's perps. Where is Binance perp? Not Binance US. No one cares. Open interest. Getting closer. I don't think that's the one I want. Let's go here. Bitcoin. Maybe look at Tether. Tether USDT. Pretty high. Same problem. Not really crazy spot volumes. Not crazy high spot volumes. These perps? Perps on Binance. A little bit closer to what we were looking for. We can see it's still not highest. That's interesting. Bybit looks like it had maybe the biggest trading day it's ever had. Spicy information. I think it's time to get into the trades. Let's get into the live trading. I'm feeling a little warmed up. I haven't done any TA, but I'm feeling a little warmed up. We're still in the exact same long as we were. I never closed it, which is actually okay as funding on Femex. Love Femex. Oop, wrong link. Oh well. Funding on Femex is pretty much zero, so we're not really paying to keep open. I would prefer to see this negative. I'd like to be paid to have this position open. We've filled quite a few fills since the last stream. The exact ones that we laid out in our stream here. We took some profit at 30K. We took some profit at like right below it. We filled during the live, and then we added back at 30K. 29.2. I did have an order that I threw in and didn't fill at like just like 29.70. It would have filled, but I didn't have it in. I threw it in after like a minute after this wick low, and then it didn't come back. That would have been so sweet. So we did fill a little bit in accordance to our previous plan. Let's see, the 15th, 14th. This is the last stream. We hit some fire. We longed at a low. Actually, that low hasn't been broken. We took profit on the way up. We added again. We looked to kind of just chop this up to close out the day. And I remember this is basically how we ended the stream. We were like right here. I think we were like right about here. And I was like, watch guys, as soon as I end this live stream, Bitcoin's going to go. And literally it did. It just went straight up. Like as soon as we closed. As soon as the stream turned off, went straight up. Consolidated. We've gone a little higher. We got even this unfilled ad down here. If we zoom out, our unfilled ad actually did add. Oh, well, it should have, could have. $60 would have been $60 higher. So I guess technically this is still unfilled. Depends if how we would have set the orders. Depends. All right, let's zoom back out. I'm gonna get a real quick. We're gonna do like a 5-minute overview here. Let's just check out our changes on the chart. We're seeing RSI lows. Weirdly, the daily's still holding on to that potential bullish divergence. We have a lower low in price, but we don't have a lower low in RSI. Interesting. Market cipher with the green dot, looking fresh, but this money flow is ugly and not bullish. Stotch, regular RSI is below Stotch RSI. We do tend to see buying when that happens. I don't know if we see it yet. VWAP trending down on the day. Not a super bullish look. The only thing we have here is momentum coming up, but with VWAP coming down and money flow coming down on the daily, that's certainly not going to be a good signal. Not going to be an up signal. Let's divide it in half and look at the 12. The 12-hour looking actually a little nicer. This lower low doesn't validate any like real confidence we would have in reversal, but we do see money flow trending down, looking to roll over. VWAP is on the positive side, pulling that price up. 12-hour definitely looks better than the daily, but still a 12-hour rolling over. Let's see, how long did it take last time? The last time we saw kind of a similar setup, it took 66 days from start to finish. That would put us, out of May into June territory. Not super confidence building, unfortunately. Not super confidence building. As we zoom in, we can start to see even maybe an ascending channel. It could end up playing as a flat top. It could. We're going to need to see these lows respected. So far, they have been. We're going to need to see that continue out for any kind of looking for upside. Any kind. We got to see these lows come up. And then maybe we get a flat top. Kind of a reversal here, but not there. Not there yet. Fingers crossed. That is not beautiful. I think we've got some subscribers. What's our long entry? Oh god, like 20. Not as good as it should be. 29.6. 29.6 on the long entry. 29.60. I gotta close some of these. Here we are. So this is some hopium. Certainly this is still in hopium because nothing is showing us that this is the immediate future. Momentum down. 8-hour kind of in that same boat rolling over type thing, but not strong. It's not strong. No divergence on the 6-hour. If anything, we're going to see bullish or bearish divergence paint on our highs as Our indicators are moving back, resetting, going back to their highs, and prices are not. On the 6 hour, we have lower highs. Lower highs of momentum off of lower lows. The only kind of positive here is this wasn't a lower low on money flow, so we can look for the 6 hour to roll over. That lines up with what we saw on the 12. But man, if I don't see it yet, I don't see anything yet. All the way down to the 4. It's all negative money flow. All the way down to the 4. This was nice that we didn't get this Doom 4 hour. I was really hoping we wouldn't get that Doom 4 hour. This is okay. This is the first higher high in momentum. We had to go all the way down to the 4 hour. And then immediately off to a lower high. Although, that's not bad. Technically, that's off a higher low. So there is some consolidation, some squeezing going on the 4 hour. Maybe that does lead to that crossover. I'm not confident. Not confident in this long right now. Our stop loss has not been hit. Here we go. We have to go down to the 2 to see anything. Our stop has not been hit. I may look to move that stop up. Because, man, nothing looks good yet. Nothing looks good. On the 2. The 2 hours is the first time frame we've looked at that isn't pure Bear Town, isn't pure Goblin Town. We do have a series of higher lows on our momentum. That's pretty nice. Better than what we've seen. Money flow is positive on the 2. We did have a higher momentum high off of those ascending lows. That's not bad. But we're at the threat of this lower high here. VWAP is saying you're at a threat of a lower high. What we really do want to see if we're looking for upside price action is for this to catch. We want to see that momentum stay up. We want to see it break the previous high into a higher high. And that's going to be really the saving grace here that we have it all. But with VWAP pointing down, suggesting there's going to be some local downside price action, and we really want to have these lows respected. So it's looking 30,000, man. 30,000 is just a line in the sand. I don't want to see this lost. I don't want to see 30K lost. Really don't want to see 29K lost. Ugh. I don't want to go through. I don't want to go through this. This is what I don't want to go through. And it's not because this would be bad for Bitcoin or I don't know, whatever. But just because it would take so long. I really don't want to see this happen. This would be ridiculous. It's like slightly lower low. Maybe you hit like exactly 25K after. Actually, this looks so spot on. I hate looking at it. I hate looking at this because it looks so spot on. Let's see. If we drag this down, it's like fall, 0.5 retrace to 34. We do have a take profit on our long at 34 that hasn't been hit. Move back down, break your low, hit stops, bounce that weak bounce to a higher low, and then run. That would be interesting. That could be the boring future. God, I hope not. God, it would just take so long. Like all the way into 2023 and like we're still trading at 50K. Very possible. Very possible. But gosh, please keep it spicy for us. Universe, if you're out there, keep it spicy. On small time frames, now that we're down to the hour, we definitely have that potential that we were speaking of with our lows ascending with a flat top. We have the potential simply because our lows are coming up. I want to see that. I want to see that paint out into a larger time frame. Oof. Weak. We have a double bottom, it looks like, on the hourly for VWAP. That's going to be like a weak reversal. The coming off a higher high is okay with a lower high momentum. Money flows green. The hour looking better than the 2 hour. I will say the day, the 12, the 8 to 6, kind of the midterm candles, not looking bullish. When we zoom in, we're seeing a little bit upside potential. I don't love that. I need to see this hourly catch. At least VWAP on the hour is coming up, so that could be backing that up. That could be suggesting that. RSI just looks ugly. It just looks ugly. At least you had a higher high. Jeez. Let's go down to the 5. Now into the short time frames. This is what we're going to be scalping on today. You're not going to grab divergence off that low. That sucks. Money flow looks like it's rejected. Momentum looks like it's rejected. It looks like we're in some, looks like we're going to test 30K again, doesn't it? Now that we're so zoomed in, this is only really going to be relevant to these trades we make right now, today. Friendly reminder, none of this is financial advice. Do not copy my trades. I mean, I can't stop you, but only copy my trades if you want to lose money, because that's like pretty much what we do here. Well, no. When we've been short, we've made money every time, and when we've been long, we've pretty much just lost it or made like nothing. So I think we need to go short more often, and the chart's backing that up right now. Our momentum has come down on the 1 with a lower high, but money flow is ignoring that. Money flow is ignoring that on the 1. So we may look for a catch here, kind of maybe a double bottom of momentum into a lower high, and then see that 5-minute roll over to 30. Is that what we're going to look for here? Let's take a look at our retracement. Let's take a look at retracement. Nothing lining up too solid here. Nothing lining up too solid. Let's look at our orders. We've refilled some of our longs, we refilled some of our longs at 30K and 29.1, so we can look to take profit again in this stream. We can look to shave off at 30. Let's see, like 30,007. Not really seeing it yet. Maybe I'm not immersed enough in the chart at this point. I have to immerse myself farther. 30.3. I don't want to take profit at 30.3. That's just weak sauce. That's weak sauce. I don't want a 1% take. We are on 5x, so that'd be 5%, but still. Poop. You already hit your 618 at 30,500, so we can't really go snipe for that. Downside snipes. 29.7. Probably looked at it 29.7. If we shave off some here. If we can shave off higher than we filled. Man, 31.6 though. Kind of like 31.6 here. Let's look to take profit there. So limit 31.640. Nah, let's go lower. 31.614. We're gonna limit. We're gonna look to take. Let's take 3 contracts off the table there. Right at that high. We, of course, have our 32.4 unfilled, and above that 33.9, 34. As we were looking for that 0.5 retracement from our fall, we're looking to take more contracts off the table there. Where's our stop? Our stop's all the way down here at 27.2. At this point, we're betting on, or I'm betting on, kind of this higher low setup. So I think I can even... At this point, I think I can even change our stop loss. I haven't done this. I could definitely move it up. It doesn't have to be this low anymore. Let's move it up to 28. Let's just put it at 20,000 for right now. Where is that here? I think we can go higher. Let's look at our retracement from all of this. Let's look at where that would land us. If our local high is in 274, 28, I think I'm going to get a little even more aggressive. I think I might get more aggressive. We're going to move it up. We could move it into profit technically, but that's no fun. You won't get to watch me lose money if we move it into profit. That's a little too high for me. Or we could play it real close. Maybe we should do that. Should we play it really close? Maybe we just snag this bottom, 29.7, close it in profit, and then look to reopen lower. We could do that, but that seems kind of lame. That seems lame. I think I'm going to get rid of some of these. We don't really need these 1 or 2 contract ads. Don't show it again. This can come down. I'm really hoping 29K holds, so maybe I should stop above 29 and then look to add more heavily at 29. So how tight can we bring it? No, we can't. We can't. Unless you want to play super close. We'll play super close. How about that? We'll do 29.7. There we go. I guess we're going to stop it in profit. 29.7. 27.44 for a $3 profit. Woo woo. Okay. We'll look to add here. I don't care as much about this 28.4. So I might take that out. Yes. All right. I figured it out. We're going to look to close heavier at 31.6 instead. So we're going to change this. Actually, instead of even adding to that already existing limit, let's just put a limit a little lower. 31.4. We'll take one contract. There we go. We'll layer it down. Let's even do this again. Because I mean, how many times are we going to take profit at 31K? I don't know. Too many. I don't like how close this stop is, though. It's going to get hit. It's going to get hit, and then it's going to bounce. 29.6. 29. 29.6 is cutting it so close. But I think that makes sense. If we're going to be playing it this way, if we're going to be playing the higher low flat top game, we can't really be seeing any lower lows on any significant time frame. All right, we'll do that. That's crazy enough. I would like to go short, but we just aren't getting the bounces to go short. I'm not going to short red candles. It's not how I play. I'm a market maker, baby, not a market taker. Now it's kind of calm. Sideways trading. 1 minute actually really consolidating sideways. RSI kind of catching. We have a higher low. All right. VWAP came down too, though. Ooh, the 1 minute is just gibberish most of the time anyway. 5 minute money flow is coming down, but it's still trading sideways. Looks like off of very local 5 minute support. 30,140. This is on the 5 minute chart, so this is not a significant support, but it does look like it's kind of traded below it, retaking it, now it's trading above. So if we can get a break of 30,002 here, we're likely looking for that 618 retracement up here. 29.8. So we moved our stop up. Let's add that to our chart. There we go. I almost want to not even have the stop loss and then just look to like close the position right here at 33. But then it's not enough to go short. I want to go short. I want to go short on like a breakout candle. Nice like fat green 5 minute candle. Just rip it off. Maybe at like a slightly higher high. That's kind of why I'm enjoying or aiming, kind of eyeing up this 30,160 level. If you saw a nice kind of consolidation, who knows, something like that, I could see that being a sweet price to rip a short. You get one of like a V top, slightly higher high. It's like all wick. Maybe the candle closes down at 31, but it wicks up here. Like that would be sly. That would be sly. 15 minute money flow's coming back up. This is definitely conflicting though. VWAP's bullish, money flow's bullish, momentum is a little saggy though. I don't know if it's trustworthy. I don't know. What do you guys think? We should do a poll. I don't even have a poll up. Look at this. I don't even have a poll. What should the poll be? Luna. Will Luna ever reach $1? That's a good one. There we go. There's a dumb poll. There's a dumb poll. You know, I think to make this interesting, because we're live streaming, and again, guys, like I do these just to keep it interesting for you. I think here's what we're gonna do in this live stream. I think we're gonna maybe just try to play this range. Let's try to just play this really local 5 minute. We're gonna do it with very small amounts of money. Let's see how many times we can fill at 30,200 and refill at 3140. That's a very small range. even on 5x. Let's do it. Let's do it. Why not? Let's get madness. We haven't really tried chop trading. I haven't really tried the chop. Let's try the chop. So 30,000, 140, and just hit. Shit. You gotta be fast. You gotta be really fast. Let's do one long. Boom. One long at 30.4. Please fill as a maker, not a taker order. Thank you. And what? 30. Man, that's too high. It's too high. This needs to come down. No. No. The spread is, or not the spread. I'm not getting the same movements. It's a little more muted here to 18. So maybe we'll tempt the market at like 215. Short one, long one. Boop, boop. There we go. We're going to try to play this range because I think we're going to be chilling in this range for a bit. Pretty lame we didn't get filled there. You can see our order is like at price right here. Where are you? Right here. We're in this block of 1,000. Nope, now up to 7,000. The market's joining us. Just take it. Just give us our one contract. There we go. We got filled. So we filled. Filled long. Let's see if we can chop trade. TP. Fingers crossed. It'd be nice. It'd be fun to just see me get wrecked here. Just straight down. One giant red candle. That'd be nice. Is Do Kwon still alive? I hope so, man. I don't wish any negativity on anybody. Anything negative, but I did see that Korea, or South Korea, is looking to have a chat with Do Kwon. You do not F with South Korea about money. You mess around and see what happens. That's not good. That's not good if you are Do Kwon. So Do Kwon, if you're out there, I hope you're okay. I hope you're doing all right. The stream's being a little weird. The stream's being a little strange. We got 437 watching. 275 likes. We're pretty far from 420. It's not an exciting day, so maybe we won't get to 420, but we try anyway. We try. We're gonna try. Look at this low volatility. This is on the 1 minute. And it's barely moving. We have to bring this down to like the 5-second chart to see movement. Maybe we'll play the broader range too. We'll do the broader range. We'll double it down. We'll martingale it at 30. 0.8. 6. Something like that. Very small amounts. Very small amounts. Because we are just trying to chop trade. Get in and out. See if we can do this. See if the market agrees. Down to the 5-second chart. You don't even have enough time to process it by the time it plays out. Lows coming down, but your lows were coming up. Money flows down. Okay. Overall, this looked like we had a swing low here recently. Then it was followed by a swing high. That doesn't really give us what we want. 5-second looking a little bearish. And the 1 minute's agreeing. But is it about to reverse? I like this. I like this. Pull this up a little bit. Money flow did set a lower low though, so the 1 minute money flow may look to roll over. That may not bode well for our little channel, range trade here. May not bode well. Looks a little better on the 5. Let's keep it here. This is making me feel more comfortable. There we go, baby. Bring it to me. Haven't seen that action follow through on Femex yet. Come on. Bring it up, bring it up. I almost want to cut it short at 31.80, which is like basically where we entered. Kusama, that's on the dot chain. Up 12% in the last 24 hours. Huh. Interesting. This is catching my eye. Maker is up 45%. Now, everything did hit some serious lows recently. But it looks like, hopefully we're coming back in. I don't know. Dude, I have to scream at my ISP. I have to scream at them because this keeps happening. It didn't happen at all. It didn't happen at all for a year. No, since I moved into the new house, so since October last year, we haven't had any issues. And now we're randomly having these disconnection issues where it's not just disconnection, it's like total internet out for a second. At least YouTube didn't shut the stream down. Let's take a look at Maker though. Maker is doing something interesting, kind of deviating from the market. Maybe that's not true. Maybe that's not true. Let's see. This chart is very old. I don't know what's going to be on it. But it does look like, I have no idea where these come from, but it does look like about $1,000 support holding on here with Maker. Let's zoom out and see the carnage though. Actually, not bad. Maker may have a pretty sweet setup. Just eyeing it out here. Not yet. So close, not yet. The 0.5 retrace sitting at 1,000. That might even be very close to this monthly support. Ooh. I wish I would have been looking at Maker earlier. I don't usually trust the 0.5, so we did have a pretty clean 0.5 retracement from $180 to $5,000, $6,000 something, off of $1,000 previous monthly support. I don't know if I'd trust it if I was going to play this personally, which I probably won't play this at all. But if I was going to play this, I would do this in two parts. I would look to make a small ad here at 1,000, and I would use that as a limit order because it's already up 50% off that 1,000. I wouldn't be chasing it. Take it there. And then I would look to have a larger order here at 680, 690, maybe just call it 700. That was another monthly support during the consolidation period. I wonder if the quarterlies have anything for us. Quarterly's saying, oh, son of a bitch, we missed it. We missed it. That quarterly, just under 1,976. That's like the perfect. And then quarterly here, 700. That's how I would look to play it. I would look to make a small entry at 1,000, probably double it down. So still not talking a lot of money. If I was going to put like $300 into Maker, I'd do like 100 here and 200 here. Not financial advice. This is just how I personally would do it. And then I would look. There it is. There it is. 618. So let's say that plays out. If that plays out, they both fill. I'd look to bail at 2,680. That'd be a sweet little play. That'd be a sweet little. It would be like 2 to 3x. 2 to 3x. Maybe a little more. That's how I would play it. I like it. I like the respect of the quarterlies. Boom. Quarterly very close to the 0.5 retrace. Boom. Quarterly resistance untested as support. Right there at the golden pocket. I think that there's value. I think there's some value. Still probably not going to take this trade. I'm not interested in alts right now. Not with the uncertainty in the market. But if I was, I might look in this box. Pretty spicy. I didn't expect to see that. Let's check back in. On our trade, 5 minute was able to kind of sneak back in there. It looks in the last minute of that 5 minute candle, indeed, back above support. I think we're moving back up to our TP. What do you guys think? I think it's very possible. Ew, we lost a ton of viewers with that disconnect. Boo! Boo! What the? Like, seriously, I don't know. Nothing has changed internet-wise, device-wise, nothing. But for some reason now, this happens like daily, dude. Daily. It's annoying. It's so annoying. Let's see. The live announcement on Twitter didn't get a lot of engagement. If you guys have a Twitter account, in the chat, I put the tweet. Please go ahead, retweet that, like it. Hopefully that'll bring more people here. We just lost like 200 people from that disconnect. And I will unfortunately say, as this has been happening in the past, when it happens, it tends to happen again while we're live. So let's pray it doesn't. We got some subscribers I didn't notice. Sorry, guys. Tenzin, what's up? Nicola Ray, a beautiful lady in the mix. Luri, Steve Mitzel, Richard P. Daniel the Great, David 71, Michael Husinga, and Ryan V subscribing right now. Shout out to all those awesome people. Good news, the airdrop bot is back. It's operational. I apologize. It's never gone out before. It's kind of like my internet. Make sure you guys are in the Discord after the live stream. We're going to do an airdrop. And we'll even do like a double airdrop because we've gotten boned out of the last like 2. So all you have to do is be in there, click the verify button. That's it. If you're watching and you haven't smashed that like button, let's get to 420. If you haven't subscribed yet, please subscribe. Voting in the poll, chatting during the live, liking the stream, subscribing. Those are all engagement, and engagement, literally, if you hit like, YouTube will probably show this to like 5 people who have never seen it. It makes a difference. Please do so. And also, I'll shout you out. If you subscribe while we're live, just shout you out. Some people like that. It's free. I appreciate you all. This is a super low volatility day. This might not have been the greatest day to trade, but it looks like our little chop may fill. It's looking fillish. Here we go. You can do it. You can do it. Go. 5-minute close a little higher. A little higher. How's that change the chart? Ooh. Momentum. Okay. 5 minutes conditions looking a little bit better. A little bit better. If we see a follow through, I think unfortunately that'll mean our chop trade is over. If we can see this eclipse its high of, I don't know, 30 minutes ago back here on momentum, that's likely going to look for a little bit of a move to the upside. After that strong close in the 5 with increasing momentum on MACD, I'm going to give that a little bit more probability in my mind. A little bit. Or we're just going to trade sideways forever. Smash the like button if you want to trade sideways forever. Don't. I hope no one wants that. What's up, Ford Groven? How you doing, Ford? Thanks for being here. We're here live just day trading, losing money, making money, being degens, looking at charts, doing analysis all the time. So it's good to have you. Make sure you jump in the Discord. Join us for the future streams. We lost a bunch of viewers because we disconnected. I hate my internet service provider. They're bitches. Floating on up to our take profit. I don't like it. I don't like it. This thing about the 1 minute is reeking of losing this range here to me. Something about it. Something about it says we should close up this and look down here again. Nah, that's not fun. Let's just double down into our pain and misery if it does. That's the little catch here. Move up. Shoti. What's up, Shoti? See, we got some new eyes. You know why? It's because all of you people hitting that like button, chat during the live. We're close to 420. We could actually make it now. 370 likes, only 50 to go. We could do it. But these new eyes, these new people, it's all you. It's all you guys. I'm not interesting. It's all you. Momentum on the 15 though. All right. Interesting. This candle's still pending. It's only halfway through. This tight trading range with multiple hits to our take profit target. It's kind of still ugly. Still ugly. MACD, though, saying that momentum is still accelerating into this candle despite very little or no price action movement. 30 minutes slowly making progress. MACD's slowly rolling over. We see waning momentum here in the last 2, potentially 3 candles. 30 minute, okay. I think this is different than since we started. 30 minute now does have a potential higher low here on momentum. With money flow, though it did break its low, that's kind of bearish. Money flow is positive. VWAP has a higher high here. 30-minute. I think 30-minute will look to roll over on momentum. I don't have the confidence it's going to break like this, but I think it's at least going to retreat to that 0 line. We may see it sell off, though. Doesn't look super strong with that lower low on money flow here. Hourly. Maybe catching us what we were speculating dubiously at the start here is this hour. If it can catch here, we get a little rejection off that 0 line. We can see some further upside or continuation. And we don't have enough yet, but we have 6 minutes till this hourly closes. Actually, that's pretty sweet. That's pretty sweet. This lower low, this looks like we're going to take a ride. To me, the hourly looks like we want to take a ride, maybe into our trade that we have proposed today, slightly higher high and then down. That's a pretty wicked candle. Doesn't feel like it, though. Boo. There we go. Get up there. Get up there, Phyllis. Giggity. I want to move that 215 down. Let's move that 215 down. Let's move it to like 204.50. 204.50. There we go. Market. We're going to give you a break. Come fill us. Come fill us. 204. Man, that's just a 0% gain. That's such a tight range. It's just a 0% gain. It's not at all gain. Let's move it back. Should we move it back? Where does the 5 minutes tell us? Nah, that's like correct here. The range is tighter on Femex right now. Looks like that 5 minute support, 30,136. And then kind of the range top, 30,002. That, if you're market ordering into this and paying fees, you're not going to profit. The only way this is going to work is the way we're doing it, and that's via limit orders, and we're getting paid negative fees to fill those. Funding has clicked up since we've been streaming, now to the neutral 0.1, but that means we're paying to be long. We don't like to pay to be long in a downtrend. Don't like to be paid. We don't like that. That's not good. I still think this one's a little more retracement. Let's click one of these off. We're up $12. We got $8 in realized profits. Like, that's $20. That's enough to retire. So we're pretty much good. Womp. Our low broke again. Son of a bitch. Get up. Not looking so hot for this range trade. One minute rolling over. Poop. 5 lost. So we were looking for that 5 to come set a higher high. We didn't get it. This could be the bail signal for our trade here, even though there's really no point in bailing on it. It's so small and such a tight range. But that's not looking as good as it did. We got this nice pop candle. We should have closed it there probably. Yes. We did move our stop up. We're looking the low of today. We're going to bail out in a very small profit if it comes. 30,000, 30. $37. Let's just do a 3007. There we go. There we go. We're going to take profit on any kind of bounce. And that 5 is coming back up. Cool. Still looking ugly, though. No. No. Are you really not going to make it back to the range? Make it back. Just go back up. Maybe if I tickle the candles. What's up, T-Boy27 subscribing? Good to have you, my friend. What's up, David? How you doing, brother? David's chilling. I saw you earlier on BitBoy. I was hyping up the chat. Edge Pow, red candle. I don't think the next meeting is until I don't think the next meeting is till next month, right? Wait, they're speaking today? They're speaking today? Is it really FOMC? Oh, son of a bit. How did I miss this? That's May 4th. What? May 17th at 2 p.m. Son of a bitch. It's today. We're not even doing a Japow stream. Oh, it's in 1 minute. We should rename this. And we just got our double fill womp. I guess we should thumbnail it too. Rename it, thumbnail it. And we should crack open that. I can't believe I missed it. What? Fed live stream. This is May 4th. Why? Usually it's the first link. I don't know what's happening. May 4th. It is not May 4th. Where are they? Chirpow. Let's see. Alternate players? Sure. They don't have... The Federal Reserve has 120,000 YouTube followers. That makes me sad. Well, this is odd. They apparently right now, well, let's do this. Look up, let's see what they said. Because the note should be out. It is time, right? I don't know why I can't find it, though. See, 5-6, watch live. There is nothing for today. It's not FOMC, though, is it? It's just Powell speaking. Fed Powell. Live stream. Nothing. I don't know where to see him speak. I'm lost. Live Powell speaks. Let's retitle live Fed Powell speaks. I don't understand. Maybe it isn't live. This isn't an FOMC meeting, I'm guessing. Yes, it is. FOMC member Mester speaks. Harker speaks. These aren't for... I mean, this is right now, but I can't go to it. Does anyone have the link? For God's sake, someone find the links. All right, somebody did send a wave cipher. Is this right? Swear to God. Actually, I'm going to open this in another window just in case. YouTube.com/watch. Not found. Nope, not found. Hold on. Technical difficulties. That link didn't work. It's not live yet, but it should be. You are very handsome. Thank you. Pong Satorn D. Thank you. You're very handsome. It's not live yet. It should be, though. He's speaking at Wall Street Journal Festival. Wall Street Journal Fest? That's rage. It's in Wall Street Journal. And live Wall Street. Well, Bitcoin not really loving this. All right, we'll set this up. One minute. Uno momento. Oh no. Oh no. Oh no. Our double down filled. What's up? What's up? Our double down filled, but I would have not been doing. I would not be planning on sideways trading if I knew the feds were speaking. I'm trying to add the other display in here so we can do both. Chapow, chapow. Doesn't look like it started yet. Let's see if investing.com has any news on it latest. Nothing yet. I'm confused. Our beautiful range. Our beautiful range. Our beautiful, like, it looked like crap. We were really just hoping to catch that tight range. Nope. 15-minute didn't come over. 30-minute, ugh. What a mix-up. What's a miscalculation? Stop loss moved up. Well, boys, it looks like our stop loss is going to get hit during this live stream, it seems. It's gunning. It's gunning. Damn it, pal. Damn it, Chapow. Let's make this not mute.
Chair Powell, thank you so much for joining us this afternoon.
Thank you, Chapow.
Thank you, Nick. It's a pleasure to be here.
And I want to welcome our audience watching along on WSJ.com, Twitter, and YouTube.
And on
so,
Tom
Chair
Brown's
Powell,
channel.
let's get started. 2 years ago,
right.
you acted very quickly and decisively. You did things that Fed chairs straight up have not done, given the emergency of the pandemic. Now, I hear a lot today, especially from our readers. They look at the economy, they look at how high inflation is, and they look at the state of monetary policy and they say the Fed is not reacting with the same urgency. What do you say to people who say that you are not treating high inflation today like an emergency?
Well, I guess I would start by saying this, Nick, that we know that this is a time for us to be tightly focused on the path ahead and on getting inflation back down to 2%. We know how people are suffering from high inflation, and we have both the tools and the resolve to get inflation back down. And no one should doubt our resolve in doing that.
I doubt your resolve.
I think if you look at how quickly we've moved in the last few months, really, then you'll see that financial conditions have tightened quite a bit. What we need to see is inflation coming down in a clear and convincing way, and we're going to keep pushing until we see that.
So to get into some of those tactics, the Fed raised interest rates at its last meeting by a half percentage point. That is something the Fed hadn't done since 2000. And you've said that you think the Fed may need to do that again at your next two meetings. Why are you being so specific? Doesn't that limit your options?
You're so specific. He's laying it out for the
didn't say,
for the markets.
So we make the decisions at the meetings. What I said was a couple
make
of
the
things. First, I
decisions
said
while we're live.
we decided to raise the federal funds rate range for the federal funds rate by 50 basis points at the last meeting. We also said that we thought ongoing rate increases would be appropriate. And during the course of the meeting, it became clear that there was very broad support on the committee for having on the table the idea of doing additional rate increases of that magnitude at each of the next two meetings. And that's what I said. And that's short of a prediction or a statement that or forward guidance that we're actually going to do this. But I would say if the economy performs about as we expect, then that's something that'll be on the table. And honestly, it's so things are so uncertain in the economy right now. It's very difficult to think about trying to give guidance out into the future. We don't know the path of the economy. There are many global events going on that can affect that are really not under our control as well.
So if the base case is to do a half point at the next two meetings, why not just do a percentage point at your next meeting? Rip the Band-Aid off.
Right now. Yeah, just all the percents
as you
right
know,
now.
inflation works through, monetary policy works through expectations. So markets are pricing in a series of rate hikes, a significant series of future rate hikes, amounting to already having done that. So we like to work through expectations, and I'm not blessing any particular day's readings, but it's been it's been good to see financial markets reacting in advance based on the way we're speaking about the economy. And the consequence, as I mentioned, is that financial conditions overall have tightened significantly. I think if you broadly across financial conditions, you're seeing that, and that's what we need. What we need is to see really growth moving down from the very high levels that we saw last year, moving down to a level that's still positive, but that will give the supply side a chance to catch up and a chance for inflation to come down as we get supply and demand back back together.
A couple of years ago, you talked about moving slowly when you're in a dark room, when the lights go out. Obviously, things are different now. It's harder to do that. You're moving in much faster increments as you raise the price of overnight money. But I wonder, as you look ahead, what are you going to be looking for to determine whether to increase that pace of half percentage point increases, say to 3/4 of a point, or to slow things down to the quarter point increment by which the Fed has raised interest rates more often over the last couple of decades?
So I do think, by the standards of central bank practice in recent decades, we're moving about as fast as we've moved in several decades. But I guess the way I would say it is this: what we need to see is clear and convincing evidence that inflation pressures are abating and inflation is coming down.
Thank you,
and
Chair
Powell. If we don't see that, then we'll have to consider moving more aggressively. If we do see that, then we can consider moving to a slower pace.
He's going to save us.
And it's going to be a judgment call that we make going forward as we carefully monitor incoming data, the evolving outlook. How are financial conditions changing? How are they affecting the economy? And that's how I think about it.
Yeah, we're wrecked.
So back in 2016, you were a governor of the Fed, and in late 2018, you were chair of the Fed. There was a significant tightening in financial conditions. There were some global growth shocks. Global growth was slowing, and the Fed pulled back from its plans to raise rates, maybe as aggressive
tools and the resolve to get inflation back down.
What? That we're seeing now, what would you need to see on that side of the markets to reassess the pace of rate increases right now?
The underlying strength of the U.S. economy is really good right now. The U.S. economy is strong. The labor market is extremely strong.
So strong.
Growth this year has been marked down, but is still at very healthy levels. So you saw today's retail sales number. The economy is strong. The consumer balance sheets are healthy. Businesses are healthy. The banks are well capitalized. So this is a strong economy, and we think it's well positioned to withstand less accommodative monetary policy, tighter monetary policy. We do monitor global events, and global events have been very important drivers of economic conditions lately. The war in Ukraine
Bitcoin and dollar
is something that has upset the global commodity picture, while also threatening the global order more broadly. And the rolling shutdowns in China are still going on, and those are having an effect on global supply chains, of course. So we watch those things, and we watch how they affect the U.S. economy. The effects are very uncertain. They probably weigh on growth, downward on growth, and probably push inflation up at the margin. But even through all that, we see the U.S. economy continuing to show real strength and be well positioned to handle the policy changes that we're making.
Chair Powell, a number of your former colleagues, Richard Clarida, who was vice chair until this past January, Bill Dudley, the former New York Fed president, have said recently that they think that the Fed is going to have to raise its short-term policy rate to 3.5%, maybe 4%, maybe higher. How are you thinking about the destination right now for how high you might have to raise interest rates?
So, as a policymaker, the way I'm thinking about it is that right now we're raising rates expeditiously to what we've been saying, to a more normal level, which is something that we'll reach maybe in the fourth quarter. But it's not a stopping point. It's not a looking around point. We don't know with any confidence where neutral is. We don't know where tight is. We just don't, and particularly in this environment of higher inflation and very strong growth and a really tight labor market. So what we're going to be looking at, meeting by meeting, data reading by data reading, is what's happening with financial conditions and what's happening with the economy. Really, with what effects are changes in policy having on the economy. Are we starting to see what we need to see, which is a really clear and convincing evidence that inflation is coming down? That's what we really need to see. So we'll be watching for that. If that involves moving past, broadly understood levels of neutral, we won't hesitate at all to do that. We won't. And honestly, we will go until we feel like we're at a place where we can say, yes, financial conditions are in an appropriate place. We see inflation coming down. We'll go to that point, and there won't be any hesitation about that.
Just as it can be hard for you to know when to stop raising interest rates, it can be hard to know when to start. And obviously, these things look blindingly obvious in hindsight. But I want to go back to last year and ask you, what went wrong last year from a policy perspective? Again, with the benefit of hindsight, knowing things now that you didn't know then, what do you wish you had done differently last year?
So we have to make these decisions, and we do make them in real time based on what we know at the time. And so I would say, if you replay last summer, we had a real spike in inflation that began in March, April, May, June of last year. And then inflation came down month after month after month for about 4 months, anyway, through the end of the summer. So we were concerned because we saw inflation spreading more broadly, and because we didn't see supply chain issues improving. We didn't see labor force participation improving. So we had real concerns. But still, the incoming inflation data were kind of consistent with our story. And then the data really changed. Changed pretty thoroughly beginning in October.
It's coming.
And we responded very much to that. So since then, we pivoted in our policy, and since then you've seen really quite significant tightening in financial conditions. I don't know that financial conditions have tightened more quickly than this in a very long time. And but that's what happened. And I've said for the last 2.5 months, I've been saying
4 to 20 likes.
If you look back in hindsight, give yourself 20/20 hindsight, then yes, it probably would have been better to have raised rates earlier. We were looking at some weak employment reports.
We're about
to
get stopped out in our long.
At inflation reports that were coming down.
About to get wrecked.
When that stopped, and when the data started pointing toward a stronger economy with higher inflationary pressures, higher wage pressures, we didn't hesitate. From that point, we've really moved. I would say almost expeditiously. Since then, we have moved, and you see where we are 6 months later since that happened. You now have the 10 years up, 140 basis points. The 2 years up almost 200 basis points, and the 2-year Treasury is a pretty good measure of policy expectations. So quite a lot of tightening, and appropriately so. Inflation is way too high, and we need to bring it down, and we're going to use our tools to do that.
Obviously, the pandemic has made economic forecasting more difficult than it's been in a long time, and I wouldn't presume to think that it's easy.
I don't think we're going to see
But looking at demand last year, the fiscal stimulus that was approved by the administration and Congress last March, it was far larger than what your own economists at the Fed were anticipating. Did that end up putting the Fed behind the curve in terms of you just didn't judge demand properly because of
Breaks. How you doing, brother?
the
Thanks
much
for
larger
subscribing.
stimulus that was approved?
Smash the likes and subscribes. Let's go.
So
Getting wrecked.
It's really not our role in economic policy within the government to reach judgments on economic actions taken by Congress or by the administration. There are other parts of the government that do that exact thing, but it's really us.
Stopped.
So I guess I would say that there was a lot of stimulus put behind the U.S. economy. That was both monetary policy and that was fiscal policy. But still, you can't get the kind of inflation that we've gotten out of that much demand. That was a lot of support for demand. You can't get the kind of inflation we have without these supply bottlenecks that we've had, and that includes the supply chain problems that we've had and the shortages. If you look at automobiles, that's a great case. ordinarily, car makers would have just made more cars. There was tremendous demand for cars, but for really idiosyncratic set of reasons, there weren't enough semiconductors, so there aren't cars, and so you have tremendous vehicle inflation. That's just one example. Same thing, we didn't see, we had a real hit to labor force participation. We didn't see that coming. And so really these supply side factors, you have to add them in to any kind of economic model to get the kind of inflation that we have. We clearly had very strong demand, and we knew that. What we didn't know and anticipate was how large the supply side effects would be and how persistent they were. And we now know that in hindsight, and we see how sticky they are. And so, as I mentioned, we're not setting policy on the expectation that we get relief on the supply side until we actually do.
All right, so that was 2021. Then comes along 3 months ago, the war in Ukraine, which has obviously been enormously disruptive to millions of people in Eastern Europe, but also has had a profound effect on energy markets, commodity markets, and we also have new lockdowns in China. How have those events changed the difficulty of what it is that you are trying to do?
Well, I mean, clearly they've raised the degree of difficulty more importantly, for the people around the world who are looking to have a continued expansion in the economy, but also for us from the standpoint of policy. So, the war in Ukraine is pushing up commodity prices for both food and energy. And we don't really know how long that's going to last now. It might have thought at the beginning, and we don't make those kind of judgments that it wouldn't be long lasting. Now it looks like it may be, so that may be a persistent effect. Same thing with the rolling shutdowns in China. They won't last forever, but they'll last for some time, and they're having an effect too. And what they're doing is they're preventing any
Femex got very excited,
healing,
very zealous on the shorts. They're trading 2% lower than
that's going to make it harder for inflation to come down, and so really they've added to the degree of difficulty to what was already a challenging project.
So we heard here before lunch from Barry Biffle, the CEO of Frontier Airlines. He says he's raising prices because of fuel costs, and there's a pilot shortage. And now those are things outside of your control. But you said just now that the Fed can no longer set policy on the hope or expectation that supply chains will give you a lot of help here. So what does that mean for Fed policy? If these things are out of your control in the supply chain, or if energy markets don't improve anytime soon, what is the implication of that for policy?
Well, it doesn't have much of an implication in the near term because we clearly have a job to do on demand. So there is an imbalance in the economy broadly between demand and supply. And so we can't really affect supply. The things that are really supply side issues, our policies don't work all the way down to here. We have a job to do on demand, and I would, for example, point to the labor market where there's more demand for workers than there are people available to work by a substantial margin. And so that means that wages are moving up, which is a great thing, but they're moving up at a pace that is not consistent with 2% inflation. So there's a pathway for us to use our tools to try to moderate demand, still to a positive level, but not at the high level that it was at, for example, last year, and try to get demand and supply back into alignment in the labor market or close to it, so that there'll still be positive wage increases and healthy wage increases, but they'll be at a level that is more consistent with 2% inflation. Wages are a very important determiner of inflation over the longer term. So that's just an example of what our job is, and we think we can do that job. In the meantime, of course, everyone is looking for the supply side to heal more. We don't see much evidence of that yet, but I mean, I still think in the longer run, that has to be coming. There will be semiconductors and other things that are in short supply right now.
A lot of people, though, are skeptical that you can get inflation down to your 2% goal without a recession. What do you know that they don't?
I don't know anything that they don't. I mean, I would say there's no disagreement here, really. It is going to be a challenging task, and it's been made more challenging in the last couple of months because of global events. So it's challenging because unemployment is very low already, and because inflation is very high, and so. But I will just say there are pathways. Clearly there are pathways for us to be able to moderate demand, get demand and supply back in alignment, and get inflation back down, while also having a strong labor market. Doesn't mean that the unemployment rate needs to remain 3.6%, which is a very, very low rate, historically low. It's 1/10 above the 50-year low. You'd still have quite a strong labor market if unemployment were to move up a few ticks. So I would say there are a number of plausible paths to having a soft, or as I've said, soft-ish landing. And our job isn't to handicap the odds; it is to try to achieve that. The last thing I'll say, though, is that achieving price stability, restoring price stability, is an unconditional need. It's something we have to do, because really the economy doesn't work for workers or for businesses or for anybody without price stability. So it's the bedrock of the economy, really, and so that's something we need to do if we want to have the kind of labor market that we all want to have, which is one where there are tight labor market conditions and wages are moving up and people are changing jobs and opportunity is growing and all of that, but inflation is not high and eating up people's paychecks.
So, Chair Powell, I heard you refer to a softish landing, and I want to ask, what's the difference between a soft landing and a softish landing? Because if the pilot tells me, don't worry, we're going to have a softish landing, I don't know, I start to wonder what he's talking about.
Well, so you fly around, sometimes the landing is just perfect, right?
It's going to be all right.
And sometimes it's just a little bumpy, and so it's still a good landing. You don't even notice it, right? So, but in this, what does it mean in this setting? So I guess I would say this: we have to get inflation down to 2%. We've got to restore, our definition of price stability, and we will do that. It will be challenging to do that. We have to slow growth to do that. That's the idea, is that growth has to move down. That's what has to happen for inflation to come down. We don't have precision tools. We can't say let's dial it into this exact level. We raise interest rates, that affects financial conditions, and financial conditions affect the economy. So there are a couple of steps there, and it is not in any way a surgically precision set of tools. So I would say there could, as I mentioned, there could be some pain involved to restoring price stability. But we think we can maintain a strong labor market, defined as a labor market where unemployment is low and wages are moving up and that kind of thing. It may not be the perfect labor market, but it will be a strong labor market.
So I'll move on from this subject, but I want to ask if there's a historical example that you could point to for what you're trying to achieve. Some people talk about the late 1990s, but even then the unemployment rate continued to drift lower after the Fed raised interest rates. So is this something that we have any recent historical experience with, what you're trying to do here?
Well, so you can look back to 1960. There have been 11 tightening cycles. And in none of those cycles do they look anything like the current cycle. We've never, I won't say never, but I'm not aware of a time when we've had 2 job openings for every unemployed person.
What's up, Larevo?
It's just an extraordinary, it's a once-in-a-century pandemic, followed by historically large fiscal and monetary policy support, followed by a war in the middle of Europe between 2 commodity makers, followed by partial shutdown of China, a very large economy. That's the manufacturing center, one of the manufacturing centers of the world. So can you look in the history book and find that? No, you can't. And so I just think we're in a world of firsts. So I wouldn't say just because it's never happened before, it's impossible. I wouldn't say that. I would say that there are plausible paths, and that this will be challenging, but we'll do our best to achieve it. And in any case, we will achieve price stability.
What are they even saying?
So what are you looking to see, either in inflation or in financial conditions,
to crash the economy,
that tells you that things are moving in your direction? Because it feels like there's a chance here that inflation does come down in the second half of the year, even though it'll still be above your target. But there's also a chance that the labor market tightens even more. And I wonder how you would I know it's hard to respond to a hypothetical, but that doesn't seem like a crazy hypothetical to be considering right now. A situation where you do get improvement on inflation, but you do continue to overshoot an estimate of what might be considered a more stable employment situation.
Well, the main thing is to get inflation down. We all read, of course, everyone reads the inflation reports very carefully and looks for details that look positive and that kind of thing. But truthfully, this is not a time for tremendously nuanced readings of inflation. We need to see inflation coming down in a convincing way. That's what we need to see.
To what we tell
and
you.
Until we see that, we're gonna keep going. We're not gonna assume that we've made it until we see that.
Flip short on that
and we're not
stock.
seeing that right now. There are some promising signs. You can point to them. There are some signs that are not promising. But really, that's what we're looking to see. So, with the policy rate where it is, you don't need to. What we need to do is push ahead with rate increases, and make the evaluation that I mentioned earlier. Is this the right level? Should we slow down? Should we speed up? I think that's what we'll be doing as we see incoming data, and make a judgment about where are we? Have we gotten as far as we need to get? And until we do, we'll keep going.
Now, a number of people have suggested to me that the one thing that might slow you down, or at least make this much more difficult, would be some kind of market cataclysm. And I wonder, in part, if that's why you're trying to be more transparent, not erratic, making sudden moves on your policy moves. But my question there is, where's your level of concern that financial stability and controlling inflation by raising interest rates, maybe a lot, might be fundamentally incompatible in that raising rates causes financial disruption but doesn't actually bring inflation under control? Where is your level of concern around that situation?
I don't see that happening. We monitor a very broad range of financial conditions, and we're doing that now. We'll keep doing that, and they're different cycles look different. Sometimes the tightening takes place in one market, sometimes in another, sometimes in credit spreads, sometimes in all of them. So we're watching them all, as a group, and of course their volatility has been up a little bit, and that has some effect on liquidity in some markets. But nonetheless, the markets are orderly; they're functioning. I think they're processing the way we're thinking, the way that the FOMC is thinking about policy.
Show up. Good to have you guys.
Well.
Don't forget to like and subscribe.
And I think
share the stream.
The idea, again, is to have financial conditions tighten to the point where growth will moderate and still be positive, but moderate to the point where supply and demand can get back in alignment, and where we can get inflation back down to 2%. And I see that broadly working pretty well right now.
Red Current?
Obviously, there are some volatile days and volatile markets, but so far, I see us as getting through this fairly well.
So this is the Future of Everything Festival.
How about that?
And in the time we have left, I want to look ahead at some of the issues on the horizon for the economy.
What's up, OB
Labor shortage. I wonder if you see that as something that might be a more persistent rather than just a cyclical feature in our economy. If you look at net immigration since 2017, because of policy reasons or the pandemic, it's been basically flat. Are labor shortages here to stay? And what would the implications of that be for the Fed?
I think there is a risk that we'll have a persistent imbalance between supply and demand in the labor market. And you put your finger on it. It's part of its population. There's the labor force. There's the labor force participation rate. But if the population is growing more slowly, there are going to be fewer workers, and that's a big part of the story. Really, in recent years, is immigration's been quite low. These are not tools or things that the Fed has, or places where we seek to guide policy. But if you have a slower growing labor market, you're going to have a smaller economy, and you could be in a situation where these wage pressures remain longer. Of course, we'd love to see labor force participation come up, but I do think that I think that's a risk in the medium term, but it's really one for other policymakers to.
What's up with the bots lately?
To look after.
And related to that,
Bot
economists
check.
have this
Say
concept
something
called
if
the
you're not a
natural
bot.
rate of unemployment. The idea that when the economy is finally balanced, there's a level of
Just spam
unemployment
the chat for a
that
second.
corresponds with stable inflation. And I went back and looked. When you joined the Board of Governors almost exactly 10 years ago,
There we go. Not a bot.
the
Definitely a
participants once a quarter
Dollar's a
project
scam.
where they think these things are. And so in 2012, you and most of your colleagues thought that that level was between 5 and 6%. Now you and your colleagues have been writing down that it's somewhere between 3.5 and the low 4% area. But how much weight do you put on the prospect that the natural rate of unemployment, perhaps temporarily, perhaps not, has actually shifted higher and might be closer to where you and your colleagues thought it was 10 years ago?
Well, no, I think that may well be right. I think you're there was a tremendous amount of turbulence in the labor market, and so in theory, the sort of matching function that is the labor market could be disrupted. People are changing jobs at all-time record rates,
Sperm whale,
and
right
there's just a lot going on. People are reevaluating their commitment to the labor force. So all of that points to a higher natural rate of unemployment. But the other thing that's clear though is that the effective natural rate can change pretty significantly over the course of an expansion, particularly a long expansion like the last one, where you finally had 3.5% unemployment and no sign of either wage or price inflation. But you had a couple of years there where unemployment was well below 4% and you didn't see inflation. So that suggests that as that longest expansion in recorded U.S. history, 10 years and 8 months, as that went on, what you saw was matching getting better and better and better and more efficient, and the natural rate coming down. So right now, it feels like the actual unemployment rate is not the perfect. You have to think about where the natural rate is compared to today's employment rate, and it does appear to me that it's probably well above 3.6%. But it should shift down as this highly unusual time in our economy and in our labor market goes on. We should see that settling down, and we should see the natural rate declining, and that itself could reduce wage pressures and inflation pressures.
Well, all things equal then, would you, as the chairman of the Fed, feel more comfortable today if the unemployment rate were a little bit higher, somewhere in the 4s instead of in the 3s?
I'm never going to say that more people need to be out of work. I would love to see
I have said it maybe before.
A labor market that's more in balance, and ideally that would start with the number of vacancies coming down, and that's one of the things that is vacancies and quits are at all-time highs, and that suggests a labor market that's out of balance, and there's more demand than there are workers. So I'd love to see people come back into the labor force, and we are seeing some of that. We'd like to see that continue, and we'd like to see the job vacancies level come down so that you're seeing supply and demand get back together. And the unemployment rate will shake out where it needs to be. It's as I mentioned, it's close to a 50-year low right now.
Moving from sort of the post-pandemic labor market to the supply chain and inventory management, it seems much more possible than it did a year ago that we're going through a big shift in how businesses manage the supply chain, and the forces of the last 25 years that really helped central banks keep inflation low, businesses pricing an efficient supply chain now you might want resilience. You might want to source goods from multiple suppliers. That could embed higher costs. So what would be the implications for the Fed if we're going through some kind of regime shift where those forces that helped bring prices down over the last 3 decades are reversing now?
So I do think you've had sort of a perfect storm of disinflationary forces for the last quarter century, and that's globalization, amplified by technology, its aging population, certainly in the Western democracies, and all of that has, and low productivity, that has all led to disinflation. And so some have been making the argument for years now that those forces were all going to flip. I don't think they would flip overnight, but I would say, certainly in the near term, there is a real possibility that globalization will go into reverse to some extent. And the trade-off would be those supply chains were very efficient, but they weren't very robust. and they broke down pretty badly in the pandemic. So, I mean, to the extent you do that, you'd have more security in your supply chain, more stability perhaps, but it might not be quite as efficient as the amazing global supply chains that we had, which were very, very fast and flexible and all that. So I'm not sure what the overall you could see higher inflationary pressures for a time, but at the same time, policy could respond to that. So I don't know that you see higher inflation.
Because it couldn't be any higher.
It's hard to say. Globalization obviously brought its costs and its benefits, and it benefited lots of parts of the world. And from our standpoint, we got a lot of products cheaper, but our manufacturing base in the West is vastly diminished. And you're right. It would be a very different world if we see that go into reverse or pause.
We're almost out of time. I'm going to try to sneak in one last question to you. You were confirmed last week to a new 4-year term with significant bipartisan support. Someone joked to me, you see that sort of support only to adjourn the Senate these days. You've been through a lot in your first 4 years as Fed chair, especially in the last 2. Is there anything you've learned in that time that might change your approach to this job in the next 4 years?
I think that there's an overwhelming need to get inflation under control. And that's what I'm thinking about. And that's what we're thinking about here at the Fed.
Getting fills, baby.
In times when, you're at 2% inflation and the economy's growing and unemployment's really low, you can have a more balanced, thought about what you should be doing at work. I think we know what we need to be doing at work right now, which is to get inflation under control, and we'll use our tools to do that. That's my dominant thought about the future at the Fed.
You might not want them.
It's a great honor to be able to serve a second term, and of course I'll do my very best, to carry out our obligations under the dual mandate, and leave it there.
Well, Chair Powell, thank you so much for joining us this afternoon. It's an honor to have you with us.
It's an honor.
And thank you to our audience on WSJ.com and Twitter and YouTube for joining us this afternoon.
They cut him off. That. And then he froze. Well, as soon as he shut up, price went back up a little bit. That wick stopped us out in our long for like $2 in profit or something silly. But it is what it is. We got wrecked. Now we're looking to go short, which probably is going to get wrecked again. We're playing with fire here. This is... Whenever they speak, man, it just gets volatile. Not a good time to trade. So let me trade for you. Let me sit here and lose money so you don't have to. That's right.
We're looking at these Walmart numbers. We're looking at these...
That's right. So you don't have to. It's a win-win. You get your trading itch out by watching me lose, and you don't have to lose money yourself. It is a win-win. We are now short. We're now net short. We have had much more success being net short lately than net long, I will say that. We got stopped out. That position was open for a long time, so I'll miss it. Not really. Smash the likes and subscribes. If you're sitting here, you haven't subscribed, you haven't hit the like button yet, what are you doing? We're short now. We got wrecked. This is primo content. Primo contento. Maybe we'll get wrecked on the short, or wrecked on the long and then wrecked on the short. Wouldn't that be fun? That's why I layered these orders up. Here's our active orders. There you go. Layered up. You can see a nice smooth layering. What's up, Coin Dog, my man? A nice smooth layering on the way back up. Basically looking to take what was support back here and watching. Looking forward to act as resistance on the way back up. We could see this definitely trade back to the top of the range. Wouldn't that be full circle? Like back to the top of the range after all that. That's possible. But we're going to be making the play here that previous support, now resistance. Let's get this line on Coinbase correct. Boom, there it is. Good enough. 29917. We're already net short here, but it is not a large position. We're going to look to add. Probably our stop loss makes the most sense all the way up here. That's a pretty big 2-3%. So we're going to need a lot of downside We're going to need quite some downside to make this a good risk to reward. This might be a dumb play. Our average probably be about 30K. I want to close any short at 29 because I want to keep adding to that 29 strength. There's the subscribers. There we go. What's up? Lynette Herrera. Great to have you. Andre JBJ. Great to have you as well. Tom B with a handsome name. Twitch Pog. That man's the play of the game. Sunil Karesh Sagar. And of course, CoinDog. You can't forget CoinDog. We already shouted him out, but the name's worth saying twice. So far, it looks like maybe we're in the right direction here. This bounce not really following through. Not really doing too much. Pretty much expected to retest 30. Could have been patient. Could have been patient and just waited, but we like to trade dangerously here while we're live. The more entertaining it is, the less likely or the less you'll feel like you need to enter dumb trades. So it's like a public service. Public service. I did not know they were going to have that meeting today, or else we would have just rallied behind it, but that was like something kind of different. That was Wall Street Journal. And honestly, wasn't that interesting. I'm not sure why they did that. Why did they do that? Like, they didn't say anything new. It was wild. It was boring. I think our short is going to fill here, but we didn't plan on being live that long, although we have 1,000 watching. Maybe we should keep going. Maybe we should wait till this fills. All of you should subscribe. We're here live trading, losing money, occasionally winning money, usually when we're short. All the time. Putting content out. Love having you guys here. Join the Discord. We're going to do a live airdrop. You'll get some free crypto just for being in there after the stream. I don't know what's up with the views today. It's wild swinging viewers. We did disconnect a few times, and that does tend to boot everybody out when that happens. What's up, Mezcal? Thanks for subscribing, man. Should you exit short? I haven't even looked. I haven't even made my real ad yet. We didn't see Gina, so this whole day is a bust. It's just a bust. My beautiful love, Gina, who's married to what I assume is a beautiful woman, but she just doesn't know she loves me yet. She doesn't know. She'll learn. She'll find out. She'll grow to love me. That's the plan. Sammy, subscribing here in the last minute. Brandon Keys as well. Good to have you guys. Good to have you. If you were here earlier, we got a little wrecked. But you know what? That's what we do. We go live here all the time. All the time. To lose money so you don't have to. It's quite an experience. Check out our sponsors, Femex and Market Cipher. Both top tier brands in the crypto space. Femex, I'm trading live on them, getting wrecked right now. Entering the short, and Market Cipher, you see me use it here literally every day. Links in the video description below and in the chat. Things are looking crappy. We had, at the start of the episode, we had maybe some very short term, like 1-5 minute, and we were looking to play this range, but we didn't get it. Look, we got sniped. We got sniped by like $1 right into the Fed meeting when we had just sold off. Our stop loss was hit, so now we're looking to enter short. Not financial advice, none of this is. I am looking to enter short at what was support, hoping it acts as resistance and we can get a clean fill there. And you got a little kind of dead cat bouncy gibberish going on, so it's looking pretty likely. Looking pretty likely. Lugo man, you're the man. Guys, jump in the Discord. Pray for our short. We're going to be live again soon. Don't miss it. Enable notifications for the channel. I don't know why. I guess so you know when we go live, but you'll know if you're in Discord. Pray for the short. I love you all. I hope you all have a great day. That was a boring meeting. We made it a little better by being here together. Great chatting. We lost some money. Maybe we'll make it back.